Hey, everybody. Welcome back to Earnings Call. I'm Jeffery Beamer, Senior Investment Strategist over at ewotrader.com. And if you've been with us before, you know we don't just talk about stocks. We talk about how to profit from company earnings. We do it each and every week right here. In fact, we are coming off a period here where mega cap tech has been really the undisputed champion of earnings season. But we shift our focus to over 600 companies that are hitting the tape this week. And a new question emerges. So here, the week of May 11th, 2026, the earnings shift focused towards AI infrastructure, enterprise tech, consumer demand, with traders watching whether leadership broadens beyond the mega cap semis. And, of course, the NASDAQ has been on a major run. So we're going to go through the list, and I've consolidated it down into some of the best candidates for this week. And we're going to take a look at the trade from last time. And also, I got a new trade for you, all coming up right now. Now, we tend to talk about a lot of stocks each week. So there is a chapter feature at the bottom of the video, and you can jump to maybe a stock that you're interested in. But here's our list of candidates for this week. And remember, I just said there's over 660 companies declaring earnings this week, but a lot of them are mid cap and small cap names. And a lot of the, especially really volatile potential stocks, trade like around $5 or $4. Believe it or not, they're under $10. All right. So I've narrowed down that list to some of the best candidates for this week. And you see they're broken out into two columns here. Breakout candidates on the left, excuse me. Those are the ones that we expect a move greater than 10%. So double-digit moves for these names. And then on the right-hand side, we have the quiet stocks. These are companies that will have earnings, and they normally just move single digits. So yes, even a 7, 8, or 9% move, we consider a quiet move, just because of the nature of the earnings cycle, all right, and how stocks usually move through earnings, and because we use two very distinct strategies. Well, really three, but one strategy, two strategies actually for the breakout stocks, straddles and strangles, and then a single strategy for the quiet stocks, and that would be an iron condor, okay? And we're going to begin with these quiet stocks today. All right. And we're going to talk about them, and we're going to look at the chart on these. All right. So let's head over to the charts, and let me give you an example of one first. Okay. This is Pfizer. Now, Pfizer had earnings last week, but the reason I like to show it is because this is a notorious quiet stock. As you can see, over the past 6 earnings cycles, this stock has traded literally in an $8 range, maybe even less. And it's really quiet through earnings. The last earnings announcement that happened last week with that, I have it circled in with that ellipse there. It moved about 70 basis points. Okay, that's 0.7%, not 7%, 0.7%. Okay, so really quiet move. So how do we handle these stocks? Okay, again, we sell premium going into the earnings event because implied volatility is rushed into the options. So let's take a look at our list this week. And we're going to start with a company called Franco-Nevada. All right. And if we jump over to the chart, you're going to see a stock that, believe it or not, this is a $300 stock. Okay. And you can see here that it's had lows around $300 and a high of $380 over the past 3 months. And I'm really not concerned about that $80 range. What we're focused on is just through the earnings event and maybe a day or two after. And you can see here that Franco-Nevada, which will declare earnings on Tuesday, May 12th, they will do it after market close. The average expected move here is about 6%. So that's what the market makers are pricing into the options. And we compare that to the historical move of the stock, and the average is around 6%. So an Iron Condor would be ideal here, selling high implied volatility. An Iron Condor, it's easy to find information online or through your broker about that strategy. And here's the thing, though. Spreads are a little wide on this. So they're a little wide on the bid-ask spread. So how we handle this is through using limit orders. And the idea is if we can do it wide enough to where the stock just stays in between the upper and lower break-evens of our trade, because there's two break-evens level, a higher level and a lower level. As long as it stays in between those, we profit. And the great thing about an Iron Condor, when the stock does stay in between those two numbers, we can just let it expire worthless, and we keep the credit that we received for selling the premium on the trade. Okay, so that is a little bit about that strategy. Now, moving on through our list as we work our way through the week. Remember, there's not really that many stocks on our list this week, but we get Alibaba. They will declare Wednesday, May 13th, before market open. And the average move here is about 7%. Now, Alibaba is really going to be a little bit on the consumer end, well, a lot on the consumer end, and mostly consumers here and in China, because this is a Chinese-based company. We would look to see really how maybe tariffs are impacting this stock, or some other economic impacts. All right. So looking at their earnings announcement plus their forward guidance is very important. And the average move here is about 7%. So could we see some volatility here? Possibly. But normally through earnings, we just see moves like this. Now, look at this last earnings announcement. You can see the gap down. But that move is only about, well, it's right around 7%. Okay. If we go before that, look at this. The stock barely even moved through the earnings announcement. So, it's really, if you can get a trade that's wide enough, say over 10% wide, you're in good shape, meaning 10% between the high break even and the low break even, okay, from the current stock price. So from the current stock price, 10% above or 10% below on this particular stock, that would be ideal, okay? So moving on through our list, we have Cisco. They will declare on Wednesday, May 13th, after market close, and the average move here is 5%. Now, as you can see, Cisco's been on a nice little run here. And the last earnings announcement, the stock did actually move a little bit more than 5%. So that's why we have a plus or minus, because sometimes it does. All right. Now at $97, this is still in our wheelhouse for an Iron Condor. But honestly, I'd be very careful here. And if I did an Iron Condor on Cisco, I would trade really small. Okay. And normally we like to trade small because, well, we trade often. So you trade often, you trade small, you trade often. That is the way to manage a portfolio, well, like a pro. Okay. So we would be looking at Cisco. Given its space, it could have a little additional volatility here this week. But again, historically, and if we look at the numbers, and we do work with the numbers, okay, has an average move of around 5% for this particular stock. Okay, as we continue on through the list, all right, I have Applied Materials here that is going to have earnings on Thursday, May 14th, after market close. Applied Materials is also a historical quiet mover, but it's on the upper end. As you can see, its historic average move is around 8%. Okay. And you can see the last earnings, even though there's gaps in the stock chart, this thing gaps around a bit. But look at the last earnings event, which was back here on February 19th. The stock barely moved through that earnings event. Okay. That's what we normally like to see. And then back here last November, the stock gapped down, but then rallied up and closed just a fraction higher on their news. So again, the stock historically has moved around 8%, but has actually moved less than that over the past couple of earnings cycles. So we definitely, given that this is a $400 stock, it is definitely one to consider as option pricing is usually we can go way out of the money and either higher or lower and get nice premium. And we, again, an Iron Condor does not, we are not selling naked options here. We're using that strategy of an Iron Condor because it does control our risk in the trade. Okay. So it's essentially selling a call vertical on top and selling a put vertical spread on the bottom. And that is how you create the Iron Condor. Okay. All right. Moving on Thursday, we have Viking. Actually, I moved those around, but Viking will declare Thursday, May 14th, before market open. So in the morning. Applied Materials is after market close on Thursday. Viking here is before market open. Okay. Now, this is a cruise ship operator. All right. They operate river cruises and European, other European destinations and Americas. They're here in the USA as well. Now, the average move here is about 4%. So, it looks like the stock maybe had a little volatility, but look, I always remember what my chart pricing reading is, and you can see it's in $2.50 increments. So 72.50, 75, 77.50. So sometimes I like to kind of condense that down to $5 because that's where option strikes are that sometimes I like to operate is every $5. All right. If that's available. And you can see that the price starts getting compressed. Okay. So looking back at Viking, it really doesn't move very much through the earnings announcement, a few percentage points, but usually that number is around 4%. So again, Viking in the morning on Thursday before market open, and then Applied Materials after market close is what we have going on this week. And believe it or not, that's it for our quiet list. All right. So, not much going on there, but out of over 600 stocks, we do have a handful of volatile stocks coming up, and we call these volatile stocks breakout stocks. All right. So here's our list here, and it began this morning with Monday.com. I'll show you the chart here in a moment. But then we have other names that you might be familiar with. We have Oklo. We have On Holdings, which is ONON. We have C Limited there, Wix, Doximity, which is a medical services company. GLBE is an interesting one for this week. New Holdings, and then York. York is also an interesting one. We're going to take a look at all those here. So let's jump over to the charts, and we'll start with Monday.com. And here is something very interesting. Okay. This happens. Okay. Now remember, with these breakout stocks, we are looking for moves greater than 10%. Okay. We're looking for double-digit moves. All right. Well, here's the thing. When stocks gap and then reverse, that can cause a strategy that we use, which is straddles and strangles. That can be somewhat of a challenge. So here on Monday.com, you can see the average expected move is about 15%. Well, today, the stock gapped higher on the open, up about 13%, and then reversed. Okay. So it didn't really hit its average move. In fact, options were pricing in for a bigger move than that this morning. This is why I always check option pricing going into one of these events. Where are the market makers pricing the move for these earnings announcements? And for Monday.com, a straddle or strangle was currently overpriced, so it would not have been a trade that we took. And add on top of that, it gapped higher and then dropped. But you can see historically, look at this. I mean, this thing will move double digits in a heartbeat. Okay. I mean, that's a 12% drop right there from a high of 189.66 to a low the next morning of 151. That was a big move. It did rally up and close at 166, but even that was a big change from the previous day at 189 and closed the next day at 166. That's a double-digit move right there. So Monday.com, and you can see this last time, okay, big gap down. So little disappointment for Monday.com. Options were overpriced for this move, and it has reversed. And you can see it's up now only just right around 2% here going into midday on a Monday. So it gapped up higher about 13% and then quickly reversed. Hard day for Monday.com. Okay. Now for him and hers. All right. This is a health company. They will declare earnings today, Monday, March 11th, or excuse me, May 11th, May 11th, after market close. The average expected move here is about 11%. Same situation here. I was pricing out a move before our show today, and it's pricing in a little over 15%. So what you would need is a big move. And let's go back to the last earnings announcement. You can see it really disappointed. It really didn't move. Where does that number come from? Well, like back here, you can see the big drop here going from roughly $63 and closing at $55. So a $7 move on a $60 stock, is 11%. So overall, I take these numbers really off the past 6 earnings cycles. So that's a year and a half worth of data. Sometimes I go a little longer, but a year and a half usually gives us a good feel for the rhythm of a stock. And even though this stock didn't move much last time, you can see there's some recent volatility. I mean, this thing has been really moving around. You can see my pricing here is in $2.50 increments, but there's gaps on the downside, gaps on the upside, and we weren't even in earnings cycle at that time. But now we are, and we'll see what hims and hers does. It'll be interesting to watch because we could see double-digit moves for this stock come tomorrow morning. Okay. Speaking of tomorrow, we have On Holdings. Okay. On Holdings will have earnings announcement on Tuesday, May 12th, before market open. And the average move here is about 12%. Last earnings cycle, same thing that kind of happened to Monday.com. It opened up down on the day and then rallied up. So not quite as big a drop as we see, but this stock does gap around. You can see, look at this one. Close of $35. Then they had earnings, and the next day they closed at $41, but they had a high of 44. So you literally go from a close of 35 to a high of 44 on a $35 stock. That's a big double-digit move right there. All right. So historically, over the past 6 year and a half of earnings cycles, the average expected move is around 12%. And again, that number is a combination of its historical moves combined with the market expectation and what the option market makers are pricing into the options. Okay. So continuing on with earnings tomorrow, or excuse me, on Tuesday. Yeah, tomorrow. All right. We have Oklo. Now, Oklo will declare earnings Tuesday, May 12th, after market close. And the average move here is 12%. Now, this is a $70 stock. So when you get a pricing potential move of 12% for a straddle or strangle, you could probably expect to pay between $1,000 and $1,500 per straddle or strangle. Okay. That is usually the pricing for a $70 stock that is expected to move 12%. All right. And so, usually for that, we need a $20,000 to $25,000 account. For that, you could trade it with a smaller account, but you're taking a much bigger percentage risk on portfolio. So for stocks like that, like this, when we get up here into these dollar ranges, you got to be really careful. I'll show you some trades coming up here in just a moment for smaller accounts. Okay. So if you have a smaller account, you can still do these trades, but you need to focus on stock price and where these stocks are trading. So lastly, on Wednesday, all right, we have C Limited. Okay. This stock will have earnings on Wednesday, or excuse me, on Tuesday. Out of order a little bit. I like to do before market open and then after market close, but they will declare Tuesday, May 12th, before market open. The average expected move here is 12%. So you see here, we have an $84 stock. All right. Last time, okay, look at this. We closed at 105.21, had earnings, the low Again, we went from 105 down, opened up at $80.40. Okay, $80.40 from the previous day at 105. $25 move. Now it did rally during the day and it closed down at $87. Okay, but roughly a $20 move on a $100 stock. Again, that's upwards of 20% move. Okay, so definitely one to look at. See limited in. I did price this out right before we came on at $84. I was looking at a Strangle, and it was costing just under $1,100. Okay, so market makers are essentially pricing in that move of about 10 to 11% is what they are pricing in. And all we need is a little bigger move than that to profit on the trade. That's what we're looking for. Market makers pricing in 11, 12% move, and the stock moves 17%. We're making money. Okay. And that's a great thing about these stocks because they're very exciting to trade because they're moving all over the place. They're popping and dropping. Okay. As they go through these earnings announcements. Okay. So that was just the last earnings announcement. We go before that, and you can see gap up and reverse. You got to watch out for that gap higher and then that reverse. And one more you can see here. This was trading at 146 the last two earnings announcements ago, and closed the next day at 174. Okay, so from 146 to 174, literally on the next day of trading. That's a big move, and that is how we profit, is by doing a straddle or strangle, going into earnings where the option pricing is a little underpriced for the event. And yes, that does happen on a regular basis. Okay, that's why we do these. That's why we do these trades. All right. So moving through our list here, we have Wix. Now, Wix will declare earnings later this week on Wednesday. That would be May. Let me, oops, not November. Okay, we look at these every cycle. That would be May 13th. Yes, 5/13. Okay, before market open, the average move here is 14%. All right, so Wix, a little website creator company, they move around, and you can see last earnings cycle we had that little big move and a gap up. Okay, so we count that day. So during the day, it went from a low of 72 to a high of 83, and then followed through the next day with another up move. And this stock can move around; it gaps around a little bit. Okay, you look at my pricing over here. It's in $25 increments. Remember when I said I was looking at the other chart like a minute ago, and I was like, look at I'm in $2.50 increments, like on hims and hers. All right, this is $25 increments. So if I spread this out and look at this, that's $10 increments, and we price ourselves here. Here's every $5, and you can just see how volatile this stock is. This thing will move $5 in a heartbeat. Okay, and then we get these consolidation moves. And here we've gone literally from a low of $63, and 2 weeks later, we're up at $83. So, this stock can move $10 pretty darn quickly. And that's what we have to look forward to on Wednesday. Moving on here, we have Doximity. Okay. They will declare Wednesday, May 13th, after market close. And again, this is a big potential mover, 20%. Now, look at this. This is a $25 stock. So here, your move, your average cost of a straddle or strangle is going to be around $500, probably. All right, for some of these moves, and that can be done with a smaller account. But remember, a debit of $5, that would mean the stock would need to move at least $5 higher or $5 lower just to break even. And it would need to move beyond that to profit. Okay. So I look in the past, and can this do this? Well, yeah, look at this. The last earnings announcement, we closed at $33.32. And then the next morning it opened up at $23. Okay. Well, that's a $10 move. Okay. From 34 to 23. Okay. No, roughly $11 move. Okay. Did rally up higher and closed at $27. So you had to move from $33 to $27, and you would have made money had if you exited sometime during the morning, last earnings event. I'll look at one more earnings event, and you can see here, look at this little gap down going from 62.58 to 54.29, and then follow through to the downside. We had a nice trade there using a straddle or strangle. So you definitely want to be pricing this out. The expected average move here is about 20%. So you could expect about a $4 or $5 move on this. And if the pricing's right, then it's definitely something to do. I priced this out this morning and it was right at the expected move. So you got to watch the value there. Usually when I see that, I don't take the trade. When the expected move, when the option pricing matches the expected move, then it's going to be hard for that to make money right away. If you want to stay in the trade, then it could possibly make money, but you got to be aware of reversals and chop while you're in the trade. All right. Moving on, we got 3 more stocks to do. A new company to our list here is going to be GLBE Online. This is currently a $29 stock. This will have earnings. GLBE Online. This GLBE is a symbol. They will declare Wednesday, May 13th, before market open, actually in the morning. The average expected move here is about 13%, and the stock does do that. Okay. Last earnings event, we had a close of $29.70 and then opened up the next day at $36. So this thing will bounce around through that earnings event, and it's done this a couple of times. That's why it made our list. Okay. And so watch out for GLBE Online. I did price this one out also this morning, but since they don't have earnings till Wednesday, I would look tomorrow on Tuesday, check the option pricing, see if it's worth putting a straddle or strangle on it. Currently today, it was not. Okay, just to let you know. All right, moving on. 2 more stocks here. We have New Holdings, NU, New Holdings. This stock historically is a little bit of a mover. They will declare Thursday, May 14th, after market close, and the average expected move here is just 11%. All right. So here you would need, this is a $13 stock. All right. So you should be able to get a straddle or strangle here for, roughly $1 to $1.50. But I wouldn't pay more than that for a straddle or strangle on a $13 stock, because you got to realize that's over a 10% move that it needs to make a profit. Okay. And, but it did make our list because it is cheap, and for smaller accounts, definitely appropriate. But it does require a little bit of a move and good option pricing to get a trade executed here. All right. And finally, another new stock to our list, because this stock really just went public. But last time I was just looking at the volatility of the stock. Okay. And last earnings event, okay, again, another cheap stock was, the stock went from 1768 to a high of 1989. So over a 20% move in the stock on the last earnings event. And then look at this movement in between earnings. So it's making a little consolidation pattern here. Okay. And by consolidation pattern, if you're not familiar with that, essentially, technically it just kind of looks like this. It's just forming a little bit of a wedge. Okay. And we see when this happens, we see a breakout, and earnings are a great catalyst for that. So definitely price out YSS. That's York Space Systems. And this stock's been moving around now. They've been pricing in a move for about 20% right now. And that's where that average move, expected move of 19% comes into play. But definitely worth it if you can get it off for, say, 14 or 15% on the option pricing, and look for a bigger move, like 20%. That's how you make money on these trades. Okay. So let's take a look at our list one more time here. I did talk about quite a bit about the stocks that are on our list this week. And again, I've whittled down the list originally from 660 to about 27, and then from 27 down to what you see here. So again, I'm going through and filtering all these out and looking for the best opportunities or best possible opportunities. It doesn't guarantee that they're going to be traded upon, but we do have to whittle down the list to get to where we find some tradable stocks. Okay, so that is our list for this week. Now, each and every week, we do talk about trades. Okay, I give a trade out, and then the next week I show you how the trade did, and we follow up on it. Okay, we have had a run of an incredible win streak, an occasional loss, and the losses that we have are small. And last week we did a trade, we faced our biggest challenge, our biggest loser to date. You want to see what it was? Well, let's take a look. Okay, we did a trade on Visa. We did an Iron Condor. Now, Visa and MasterCard are kind of go hand in hand. You always hear those names together. And I had a choice. I could choose Visa or MasterCard. Well, Visa came up first and had a little better pricing. So I went with Visa. Okay. My goodness. So you'll on your own time, you can look at the two charts around the last earnings event. They declared the same week and within a couple of days of each other. Okay. Visa, letter V. Let's take a look at see what it did. It blew out its average expected move. Okay. Our first losing trade on Visa in over a year. Okay. And I do these trades on every quarter. Okay. And this is our first losing trade on Visa. And you'll notice the number there this is because we did two contracts. Okay. So the loss there of $366 is because we did two contracts. So really, if we did one contract, then we were only the max risk would have been 180 something, right? 183, I believe. But here we did two, so our risk was 366. We base all our trades on a value of a $10,000 account, so that's a 3.66% loss to portfolio. And in my world, that's very recoverable. That's not a big, it's disappointing that it went against us. Okay. And here's the thing. This blew through the top of our trade. So the call spread that we sold on top, okay, that's the one that we're concerned about. The put spread on the bottom, we let that expire worthless. We keep that credit. Okay. It's that call spread on top that you need to worry about. And here, since pricing when we exited was not only above our short strike, but also above our long strike call, we actually didn't have to do anything because we took assignment on our short call and we exercised our long call. And if that sounds complicated, guess what? Our broker does that for us. Okay. They do it automatically these days. Back in the day, might have been an issue. Today, in these days with technology, they see that your options are in the money. They know you're going to be assigned on your shorts. They're going to exercise you to protect not only you but them. Okay, your broker protects themselves. All right. So here we're taken out of the trade automatically. Didn't have to do anything. Okay. And that's what I wrote to our subscribers. I said, hey, we don't have to do anything, but we're going to take a loss on this trade. Now, where we would have had to take action is if it closed in between our short strike and our long strike. That is where we have to kind of make some changes. And I talk about that to our members and to our subscribers. All right. Each and every week. So here, as you can see here, we did just let it go through that assignment and exercise. The trade just went away, and we did have the loss of $3 or $366 for two spreads. All right. So that is how Visa. Now, guess what? If you look at MasterCard, which is MA, that would have been the one. That would have been the one. MasterCard did barely moved at all. So I don't know why Visa did. In fact, Visa gapped up and it filled that gap. It came back down, filled the gap over the next several days, but we didn't have enough time in the trade to enjoy that. And but MasterCard would have been the better play this cycle. We'll remember it for next time. and when we're pricing out these trades. So what do I have for you this week? Well, I have a new trade that is an Iron Condor once again. Just love these, okay? Because they're just so consistent on a regular basis. And here we're going to do a trade on Alibaba, okay? We're going to do Alibaba will have earnings, as I mentioned, a little later this week. We're going to do an Iron Condor there, and with the average expected move in the single digits, an Iron Condor is really the best way to look to make profits because implied volatility is rushing into those options, making them more expensive. I did this trade about a little over 10% out of the money. Okay. So above and below. All right. Looking for then a single digit move in the stock. It could move 6%. It could move 7%. I'd be okay with that. Okay. Just don't move double digits. That's all I would want. All right. So an Iron Condor and Alibaba is up on our list for this week. So come back next week. We got more earnings coming up next week. We get some bigger names next week. Also, we're just in that interesting little window here where we have still lots of companies declaring earnings, but not some of the common names. All right. Those, we get some big ones coming up, like NVIDIA. Okay. That's coming up. I'll have to check. It's either next week or the week after. But names like that and Walmart and others coming up, still yet to declare this earnings cycle. All right. So that is our list for this week. I appreciate each and every one of you for joining me. If you like what you see here, please like and subscribe, and just join us here again next week, and we will go through our list once again. So everyone have a great trading week, and I'll talk to you then. Take care.